I think due diligence oftentimes is not only a looking outside, and it also is the other element of looking inside. One of the issues I think with foreign companies, and especially one perhaps already had a nominal presence in China, i.e. they might have a rep office, they might have a small WFOE where they have a selected number of local employees, and these employees are then given a mandate to develop domestic distribution network, local customers, and so on and so forth, and that they will be recommending candidates to the home office, and they will, because they know the local players, their words are oftentimes taken seriously by the home office, and they just take recommendation on that. But oftentimes when we do due diligence, but we're oftentimes engaged also when there has been whistleblower allegations about potential conflict of interest or bribery or corruption issues involving the employees of multinational companies. And when you do this post-transaction exercise, then you found out, okay, oh, by the way, your distributor that you just give a lot of business to the last 3 years is actually owned by your national sales manager. For the third-party agents, because Canada, I think, has its own anti-corruption bribery legislations, and I think it's important, especially when they're entering into relationship with deal brokers, intermediaries, to have a level of skepticism and to really ask, is this necessary to, from the business model perspective, right? Why are we inserting another layer? Why are we getting an agent between us, for example, with the end customer? And to also ask yourself the question that who are the end customers? If the end customers are, let's say, state-owned enterprises or government counterparts, and then you also hear from your own employees that this third-party intermediary, so-called like agents, right, is really recommended by the end customers. They say that, well, if you want to sell to me, you have to go through this particular agent. If this kind of scenario preempting the establishment of third and third-party relationships should already be red flag issue to think about, because it is potentially possible, and we have seen a lot of this in real cases, right? Is actually the stakeholders are the end customers. So essentially government officials or public servants, they have used their family members and associates to set up this shell company, and they dictate that you have to go through this shell company to deal with them. And in effect, you're essentially indirectly bribing government official if you enter into that transaction. So the potential legal and financial risks to the company goes beyond just, well, what if they don't do what they're supposed to do, but it also poses potential risk on the bribery and corruption side that people do need to pay attention to. There tends to be, for foreign investors, when they're looking at China investment, right, they believe that the sweetener, all that they need to give to the Chinese companies, capital, money, right? Well, I'm giving them money, then we should be a good partner. But they're not realizing that the minute you sign on the dotted line, the transaction is completed, the money is with them. What else can you bring to the table, right? If they have access to the money, and if you don't really have the same game plan, then you're bound to walk farther and farther away from each other. However, if you're not only giving them money, but you're also having, for example, technology to offer, or their plan is to really sell the products that they make domestically to the Canadian market where you have a dominant position, and they can't do that without you. It's much more of a balanced partnership. So it's almost like, again, going back to the analogy of a relationship or a marriage, right? A sustainable, long-term, happy relationship is a balanced one where both parties have something to offer. Then you can say that we are equal partner in this. If one party is hugely reliant on the others, and the success of the relationship is really at the whim of a single party, most likely that relationship is not going to be sustainable. I think especially for state-owned enterprises, there are different laws applicable in China. I think the most overreaching one is really state secrecy law. So, as a third-party service provider, we comply with local laws and regulations wherever we operate. So it's important to have that parameter. So, you can't conduct like a public domain searches on the state-owned enterprises, but you can't really apply human source inquiries or, to really look for information that is not publicly available. And the last thing you want in due diligence stage is overzealous advisors, right? Trying to help you, but doing things that are illegal or unlawful in China during the due diligence exercise that actually can bring you to a lot of trouble. So I think the challenge of state-owned enterprises is really to understand, the parameter and what you can or cannot do. So to really go to first-tier advisors who have experience in that area would be critical. The public listed companies, I think the issue is that they're normally huge and they also have complex organizational structure. So you're most likely going to be transact with not the holding company, but only a division or subsidiary. So it could become quite expensive if you don't define the due diligence scope the right way. If you're trying to do a due diligence on a listed company with nationwide presence, numerous subsidiaries and affiliates, and if you want to do everything, it's just not something that's affordable enough for SMEs in the situation. So to really understand that who are influencing your particular transaction, who are the stakeholders for that, and define your due diligence to suit your particular transaction would be a tricky thing to do. So again, I think in those instances, I think go to your trusted advisor. Early stage, establish confidentiality parameters, sign NDAs and so on. But I think it's always important, even from the service provider's perspective, let's not talk in riddles. Sometimes I often have clients who come to me and say, I want to do due diligence on a Chinese company. How much would that be? So I have to kind of like scratch my head. I need to have more information. I need to know the name of the company. I need to know what you're going to do with the company. Now I can apply my skill and expertise to help you to design the most appropriate and cost-effective scope. Of course, I also appreciate there are a lot of sensitivities around the deal oftentimes, right? So to protect both parties, I think if you're going to a reputable firm, they'll be more than willing to undertake confidentiality obligations with no strings attached. They get the information, they help you to design the scope. But it isn't particularly helpful to either parties if you're keeping a lot of the things from your service provider and you're just telling them very little, because if they don't understand what you need, whatever they're going to offer you is not going to suit your purpose. So we're there to guide them, help them along the way.